Hello, fellow traders. 'Tis I, the Rumpled One. It's Thursday, August the 29th, the year 2019. Let's talk trading. Euro AUD, day 19. Trade on the range. I'm sure you've heard of home on the range, but trade on the range. What do I mean by that? Well, as you know, price ranges. It starts at the open, goes up to the high or down to the low, then reverses, goes up to the high, goes down to the low or up to the high. Does that every day. But you can pick almost any point on the chart and price is going to range away from that point. It's just the way price moves. And so if you look at the methods that I present, which are all horizontal lines, you can see why those methods can be profitable. Of course, these videos are for educational purposes only, and your results may differ from mine. Forex trading, like all trading, is very risky. You can lose all your money in your portfolio and then some. So, if you need financial advice, seek it from an accredited financial professional rather than somebody on YouTube, right? Okay, that out of the way. Here we go. Now, thing about ranging is if it ranges against you, you lose money. You lose a lot of money. But so long as you have your risk and money management in place, you should not lose more than you are willing to lose per trade. Okay, here we go. Look at the weekly Euro Aussie, which we've been trading this month. And you can see here from the open, price moved down 130 pips, okay? But off the high, it's moved 264. And then off the low, it's moved 52. So you can see those are some nice ranges. It'd be easy to capture 10 or 20 pips out of those, right? Or simple, just trade the horizontal lines. And notice how price is right back to that weekly midpoint there. So in other words, it went down to the low and then it came back up. Buy zone, pivot point just outside the short zone, just below it here. Really not much of a bias. You take it, it hit the pivot, cash out, then all bets are off. You trade what you see. Once again, price has to range away from the open, hit the buy zone, moved up, money to be made. Then again, hit the short zone. Once again, took out the pivot, started to reverse. You see here, it didn't break that point. So once again, you either take a little profit or scratch the trade. Gave you another opportunity. Here it broke through. Time to rake it in. Once again here. And you see this isn't hairy hindsight. This is just showing you what was going on real time because these lines stay the same the whole day. There is two exceptions. One, the VWAP line will move, but we really don't do much with the VWAP. And then the future pivot point, the FPP, that will move based on the range and show you where the pivot point for the next day is going to be. So in other words, if the day ended right now, this is where the pivot point would be. And it's funny because I've never seen anybody else use the future pivot point. So I don't know. I guess maybe that's something I invented. Okay, on the daily, you see we've got 5 pairs over 100 with the Euro Aussie being one of them. Once again, price has to range. It ranged 104 pips, 33 off the open at the moment. High to close 84, close to low 20, so it's right at the top of the red or green rat zone there. So home on the range. You can just look at any of these horizontal lines and you can see how price is ranged away from them. So that's why when it hits the line, you take the trade in the direction price is moving. and you'll be able to accumulate pips that way. Now, the other thing about the range is when you know things like the average trading range or the average daily range, you can then expect when price may reverse. Okay, I think I switched templates here, so I'm going to have to change the Einstein. It's funny, it took me almost a whole month to realize this. So let's see, I think we had it at 4.2. Really needed to expand the Einstein line because of the spread here. And so you can see, since I just changed the indicator, we'll pick it up. Maybe we'll revisit it in the next few minutes. Okay, price action. Once again, we take advantage of the range. In this case, we're looking at the hourly range and noting that when price opens between two lines, in this particular pair, chances are price will not stay between those two lines. So here, if you, right now, you could have taken the short at 64.20 and you'd be up a couple of pips. Once again, let me warn you, since this pair is over a 2-pip spread, instead of looking for 5 pips, you look for 2 or 3, because you're going to have to make up 2 pips of spread. But it should be obvious to the viewer that price opens and doesn't stay between the lines more times than not. Even here, it opened, it exited, not by much, but it did exit. And that's what we're banking that price action on. Plain blank chart, what do you see? You can see how price is, once again, ranging. So you can draw lines, a horizontal line, just about anywhere you want. And you can watch how price will cross. All you have to do is take advantage. Once again, showing the NFP or FOMC or any news event trading screen based on the previous day's open, high, low, mid, and close. And you just take the trades as price crosses those lines. And you can see once again how simple this could be. The shaded area is the previous day here. Once again, you can see taking price in those directions will pay off usually. Frequency distribution. I did the high minus close. Maybe we should do something different. Okay, we're talking about range. So what we'll do is we will go in here and we will do high minus low, which that gives us the range. And so on this particular pair, you can see over 50, 95% of the time. But we can go in here. We can change a couple of these real quick. Scroll down here. Let's put this, make this 200, 150, so now you can see here, somewhere there's a drop off somewhere here between 50 and 100. So you can go back in here and do some fine tuning. Okay, so let's go 50. Now let's do it this way. 50. 60, 70. Okay, now we're on to something. So the difference is going to be greater than 70 about 65% of the time. That's about 2 out of 3 times. And that's not too bad. So what you would want to do in these cases is price gets past the 70 point. You see here 80 only about half the time. This somewhere in here is where you want to start looking for price to do a reversal. So we can look at today's, the current range right now is about, we've got, what, 104. So that only happens about 34% of the time over 100. So you can see when it put in that new low, it's like, okay, let's start looking for a reversal. And you can see here, this is where the low occurred. What happened? This is all just based on the range. So that's why I talked about home on the range. And what are we showing here? Oh, this is the wick zone here. So here's the wick zone for the previous day, the upper and the lower. And once again, you can see how price doesn't really like staying inside those wick zones. And see, that was the 8. I can show this here on the H1 chart, the rat zone, using TROHL5. But you can see, once again, looking at the highest open trade, a holo trade there, and a holo lowest open trade here, you see you had an opportunity. Once again, the opportunity is taking advantage of the range. Now, since we were talking about range, let's do the last, let's do the last 1,000, let's see, what's 100 and, let's see, we've got 24 hours in a day times 5. That's what, 120. So let's look at a week's worth of range on the 1 hour chart. So 66% of the time, we're going to have an hourly range greater than 15. That's why when price opens between two lines, it doesn't stay between the two lines. So once again, just using some simple frequency distribution analysis, easy statistics, you can see how you can set up your trades based on the range. And then what you can do is exploit that knowledge. So you can see here price is entering back into the rat zone. We're going to look for a reversal later. Now, there was a trader that asked me about a screen, so I'm going to pause and find that screen. I think the one that they're talking about. Okay, fellow traders, back to you. I found that template. I believe this is the template they were asking me about, because it has the ATR, it has the range gauge here. So right now for the Euro Aussie, today's range, or the average range, is 142. Today's range is 104. For the week, the average is 209, and the range was 316. So looking at the ATRs here, for the weekly, there's the range here, the range there. And right now we're looking at the H1 chart. Maybe if I switched over, well, the time's running out. But they were wondering how to trade. Once again, price has to range. You're going to trade away from the open. And then when it hits the ATR range, that's when you start to look for reversals. It's really simple, and that's all there is to it. So remember, fellow traders, it's not what you trade, it's how you trade it. So go out there and drain the banks. And don't forget to subscribe.